personally think that we're in the early stages of a bull market. I think Polkadot's focus on like community building, active users, and attracting projects to build on the chain is better than focusing on, oh, let's build a DEX so we can make money off fees. I think the game has changed in that now people are actually looking for like product to market fit. People believe that Ethereum should trade in the $3,200 to $3,500 price zone. Oh man, it's another one of those like get rich overnight things. Some of our articles get like 100,000 views in a week. How disrespectful. You went to them first when you could have come to me. I would have written that article better.
Sorry you can't see me right now. We are in a small booth here at Polkadot Decoded, and I'm with Ray from CoinTelegraph, who has had a speech recently, which is quite interesting. You actually organized the panel, the public pressure team. Ray is working for CoinTelegraph for how many years now?
Over 4 years now.
Wow, that's a long time.
Yeah.
So what I want to know is like, what attracted you to CoinTelegraph? Like, how did you get in to begin with?
I can give props to Rakesh Upadhyay, who's one of the technical analysts working in that department. So when I first got into crypto in like mid 2016, I didn't know anything about cryptocurrency, and a friend had asked me to, I was living overseas at the time, and a friend had asked me to help him build like a retirement portfolio for him and his wife and his child, because when you work overseas in the like Middle East, you don't get a pension plan. So you get your kind of like end of contract bonus as a gratuity. For each year you work, you get 1 month's salary. So you're all on your own when it comes to a pension scheme and investing and all that. So this guy was asking me to help him with that. And he mentioned Coinbase. And I was like, what's Coinbase? And he was like, it's an exchange for some stuff called cryptocurrency. And I remember hearing about Bitcoin in 2011, also in Abu Dhabi, because one of my friends who was buying gold and silver in Abu Dhabi also asked me about Bitcoin. And at the time I was only trading stocks. And I was like, oh man, it's another one of those like get rich overnight things. I said that without ever looking into it. And I had heard about Bitcoin in like 2010 in the London borough market, where they were also experimenting with localized currencies for like guilds and for like people that like merchants who work in farmers markets.
Yeah.
So I had heard of Bitcoin then, and then I heard about it in 2011 and wrote it off because, I was all into fundamentals and stocks and whatever, equity and revenue, and Bitcoin really had none of that, and crypto kind of had none of that.
Yeah.
So after this guy told me to look at Coinbase, I looked and it looked really interesting. I got into crypto then, just like trading Litecoin, Ethereum, and Bitcoin speculatively there. It was really easy. You could arbitrage between the different exchanges because like Kraken and Coinbase had these wide price spreads, as did other exchanges. So you could like buy cheap here, send it there, sell it, go back and forth, right?
Yeah.
So then I needed to learn more about crypto, right? I knew nothing beyond those three cryptos, right? And CoinTelegraph and CoinDesk and like Ethereum World News, CCN was still around then.
Yeah.
Bitcoinist was around then. And then there's like another one that the guy that owns Bitcoinist, but I forget the name of that one. But you would basically read like 8 journals a day, right? To try to figure out what coins are moving, what's coming out, and just get familiar with the space. And that's where I discovered CoinTelegraph, because this guy Rakesh was writing price analysis there. So I used to read his price analysis. This was 6 years ago, to just get familiar with like, how are people figuring out like how to run analysis on these cryptocurrencies, because they don't have the same sort of like valuation metrics that a stock or a company does. So that's basically how I got into reading CoinTelegraph. And long story short.
And then you joined the team.
Yeah, so that's a bit. I was working in PR and doing like ICO and blockchain conferences in Dubai. So writing a lot of PR there. And of course, the guy that owned that also owned some crypto media companies. So I started writing there and then editing there. And then I eventually got a gig at Bitcoinist writing there. At the time, Alan Scott was their editor-in-chief. And Alan Scott is now like, he was once the editor-in-chief also at CoinTelegraph, and then the head of markets at CoinTelegraph. So when he went there, he brought me on from Bitcoinist to work with him at CoinTelegraph. And then that was my last move. I've been there ever since.
Wow, interesting.
Yeah, quite a journey. Probably told you too much.
And what would you say is like the biggest challenge working at CoinTelegraph, like when it comes, especially given the market conditions right now?
All media, really, logistics, because it's, decentralized. Everyone's in Slack and everybody's remote and they're in different time zones and everyone has their own processes and objectives. So sometimes it's hard to meet all of your objectives or even company objectives when people are spread out all over the place and some are in the dark and some know what's going on. And this time right now, it's just like optimizing staff. So all crypto companies, CoinTelegraph included, have had to reduce the number of staff and kind of restructure things to survive. But I think CoinTelegraph has done a good job in not cutting core employees. So, our CEO looked at areas where NFTs aren't selling or projects are not buying sponsorship packages anymore, or, corporations are no longer looking to go deeply into blockchain and just throwing money at everything that's like Web3. So there had to be some reductions in those areas because they were dependent on sales and sales weren't coming in, but our core editorial team has remained pretty much 100% intact. So I think that that's commendable given that a lot of our competitors have been firing people or completely going out of business or cutting writers and whatnot. So it's tough, but just got to put your head down and hustle. I do feel like we're coming around a corner in this market. So maybe brighter days are ahead.
And let's talk about the numbers as well. What would you say, are your average views when it comes to these articles? I know it depends on the article a lot.
Traffic's
so it's hard,
good.
But what's the traffic in general, overall, let's say high level?
It's hard for me to speak to that because what we see on website and what we see in Google search are two different things. So if you go to our website and you look at an article, maybe it's only got 1,000 page views there, or maybe it's only got 10,000 page views in that day there. But if you actually go look in whatever our SEO team does in Google or Chartbeat or other analytics software, we can see that things are doing really well. Like that article, some of our articles get 100,000 views in a week. So one thing that you have to do as a content creator in these tough times is make sure that your keyword search and your topics and headlines align with what people are looking for. So everyone's into artificial intelligence and AI right now. Everyone's into what else is it? Everyone's into how-to content. So everyone's into Bitcoin ETF stuff right now, but AI was basically the big thing. So, we have kind of had to adjust to that.
Okay, that's an interesting strategy. I mean, at the end of the day, SEO is key, right, into everything, because if people don't find your content, they're not gonna be able to read it. But
I can tell you, you'd be surprised, what happened in crypto today? Why is Bitcoin price up today? Why is Bitcoin price down today? Here's how many companies have filed for a Bitcoin ETF. Any one of those headlines will get you more than 100,000 views in a week. Wow. If you search those things in in Google now, CoinTelegraph will rank in the top 3 on those. So we've kind of adjusted our strategy to that because that's how you get new readers. People our core readers keep coming back, right? But we need more readers. We need new readers. So having to write evergreen and high SEO and very click friendly, high search content is what brings people in that have these really simple amateur questions. And then the hope is that we hook them and they look a little bit deeper at some of our other content once they've built a base understanding of crypto.
And one of the other advantages you have, because you've been so long, and CoinTelegraph is quite an old media platform now when it comes to crypto. In crypto years, you're one of the earlier ones. I know that a lot of content creators, myself included, use CoinTelegraph when they're referring to news and promote it. And so imagine you've got people like Crypto NDO, BitBoy, Coin Bureau, all these large content creators who are constantly checking CoinTelegraph, reporting on that, and then driving that traffic there. So you're getting extra traffic there as well from those people, which I guess
great.
That does help as well.
We appreciate that, and I wish more people would do that because I get so jealous when I see all the exclusives go to CoinDesk, The Block, Blockworks, like
Yeah.
they're getting exclusives, and sometimes I know these people, or I'm in a Telegram chat with them, or like we all work with the same PR firm. So I'm kind of like, how disrespectful, you went to them first when you could have come to me. I would have written that article better and done an interview.
But that's another question I have now, that I think that what's happening is it could be that certain content creators have deals with those specific firms, and that could be the reason why they're getting the exclusivity.
Yeah.
I think that
you're probably right.
Yeah.
That calls into question. I mean, exclusives are good. There's nothing wrong with that. But sometimes if you have that relationship, it might call into question like journalistic ethics in some cases. So, CoinTelegraph is it's free for you to come talk with us and all that.
Makes sense. Cool. So let's talk about the market, because I know you're saying that that's your specialization. What do you think is going on right now? I mean, Bitcoin is doing very well, right? It broke 30K. I mean, Bitcoin is doing well. Ethereum is doing okay, but the altcoin market is absolutely destroyed still. We didn't come out of that negativity zone, let's say, when it comes to the price of the altcoins. What do you think we're going with that? I mean, do you think it's going to take time? What do you think is needed for those altcoins to pick back up again?
Bitcoin dominance is above 50% right now, and usually when Bitcoin dominance rises, then you see total altcoin market cap, which is the market cap of all altcoins minus Bitcoin. You see that drop, right? So those things kind of have like an inverse correlation, where if Bitcoin dominance is up, altcoins are hurting. If Bitcoin dominance is down, altcoins are rising. We also noticed that with Ethereum's dominance of market cap of all altcoins is very strong right now. Ethereum dominance continues to rise. And I think that's because of staking and the liquid staking derivatives narrative. So it's not really an issue, but it's just a dynamic or a result of this current scenario, which is that you get guaranteed yield from Ethereum, right? Like 4 or 5%. And then you can take your IOU tokens from staking Ethereum and use that to maximize your yield, or to even go into LSDFi and begin to collateralize and pull out value from those LSD tokens to mint and borrow stablecoins to get deeper into the market. So because of that, I think that people are viewing Ethereum as a less risky trade, because not everyone, of course, this is a generalization, but a lot of people want to be spot long on Ethereum. It is still very far away from its all-time high at like 4,000. It's trading under 2,000 right now. So staking is continuing to rise. People believe that Ethereum should trade in the $3,200 to $3,500 price zone. We're 305 days away from the Bitcoin halving. We're not yet in a bull market yet. We know that a rising tide lifts all boats. So there's a strong narrative for Ethereum price to rise over time and be spot long and ride that momentum. And whilst doing that, also take those LSD tokens and trade those. So I think that's got people kind of not focused on altcoins right now. The other issue is regulation. The regulations in the States, like with the SEC and all these issues with coin delistings at Coinbase, at Kraken, at Binance, like nobody wants to go into a high volatility asset, which is an altcoin right now, when it might be delisted, or when you are the seller of last resort, or when you want to sell, there's no liquidity for you, or the price is only going down, 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 down. So beyond just saying that we need to get in a bull market and then see risk sentiment and investor confidence return so that people can speculate on altcoins again, I think the game has changed in that now people are actually looking for like product to market fit and real world application for altcoin projects now. Whereas in the past, it was just like a press release would send price up 20%, right? Or we partnered with Google Cloud, or they invested $100,000 in us, and the thing does like 300%. It's a little bit different now. So, every new market cycle is driven by a new trend and a new dynamic. And sometimes those historical patterns repeat themselves. So we should see Dogecoin and like Pepe Coin and Shiba Inu, and the meme coins will probably moon because they have low nominal value and people see like a quick buck to be made on those. But tokens like Litecoin, Cardano, some of those other top 10s, they probably need to show more like on-chain activity, more daily active users, sustainable supply-side fee revenue, better token economics, and some sort of real-world application that backs up a valuation to the extent that someone wants to put money in them. So the market is saturated. There's a lot of L2s, and now it's becoming more competitive and Darwinian, and the strongest projects need to present themselves and show that they're the strongest, and then begin to draw in that liquidity.
It's a very interesting take. Thank you for sharing that. Now we are at Polkadot Decoded, so I have to ask you, like, what do you think about Polkadot itself? Do you think it really is going to be, we're not going to say an Ethereum killer, because it's not an Ethereum killer, that's never been the vision, but I would say it's trying to build a bridge with Ethereum eventually. It is an interoperability ecosystem, we know, right? They're building bridges with Cosmos now. There was even a project that was talking about building a bridge to Cardano. And so what's interesting is that now we're seeing bridges to the, the guys that used to work together, Gavin, Vitalik, and Charles Hoskinson, are going to be connecting again through blockchain. So what's your take on Polkadot?
I have multiple views on that. So I think the multi-chain approach and going cross-chain is a great step forward. All roads lead to Rome, right? Like Romans built roads, and that's how they traversed their empire and maintained it and spread their culture. And that's also how they brought in culture and trade and all the best things from various territories that they allied with or conquered. So Polkadot, and just in general, markets function better when they're more liquid. So the more users and the more interoperability that you have between different blockchain ecosystems, the better. I also think that, as a trader, we're in it for profits, and it's hard to go long on a lot of assets in crypto, but you have to have vision, and the vision is, what are they building, and who's building with them, and what niche are they attempting to grow in, and is there demand there? So I like that Polkadot is focused on like projects and Web3 projects and builders and like music platforms and NFT platforms, and like the panel I hosted today, which was about music, entertainment, and movies. Those are real CEOs of real companies that are already having multi-million-dollar valuations in the real world, now just pivoting toward Web3 and building within Polkadot. So their vision is a lot longer than an investor or a trader's vision. They're looking at like 3 to 5 years, where will we go? And the one positive thing I can say is that every time you see a surge in activity on Ethereum, the gas fees just get out of control. When Pepe Coin was mooning, it was like $35 or $50 just to transact, and that was on Uniswap also. And like, if the asset's not multi-chain, Pepe Coin wasn't, you're screwed. You've got to pay those fees. So any project that is multi-chain and that's building outside of Ethereum, that's already functional, when fees go high and when we're in a bull market and the Bitcoin meme pool's all backed up and it's taking days for transactions to go through and they're costing $50 each, and the same for Ethereum, it's congested and slow and expensive, that's when you should see the most robust, L2s and other L1s thrive that aren't on Ethereum. So I think Polkadot's focus on like community building, active users, and attracting projects to build on the chain is better than focusing on, let's build a DEX so we can make money off fees. Let's build a DeFi thing so all these DeFi projects can come build on it and we can get this massive total value locked and make the news and make all this money off fees. But like 10 out of 10 of them are rug pulls, right? I'm glad that they're focusing on more than just liquid staking and DeFi and DEXs. So it's a good thing.
Now, I want to get your take on market makers. How important do you think they are to the crypto space?
They're essential. And I think the kind of like dissolution of Citadel and SVG Bank, those were crucial bridges for getting institutional flow into crypto. And beyond this past week, where we've seen a lot of Bitcoin ETF applications lead to an inflow and to like fund money into crypto, it's still pretty stagnant. Funds that I talk to are not seeing a lot of like institutional interest and inflow coming in. So market makers provide that liquidity. They build the books so like, you know, bid and ask requirements can be met, and that's an environment that projects thrive in. So yeah, I think we need regulation and more transparency, but the absence of market makers is why we have seen really low volatility in crypto. And then when you do get a volatility spike, you know, if you're on the wrong side of that, you end up getting liquidated. So it leads to these kind of like liquidation cascades also, because books are so thin. So market makers are essential.
Does CoinTelegraph like collaborate with any of these market makers like Wintermute? You're probably familiar with them.
Not at
Crypto?
all. No,
none of them.
No. Nope, not at all. We have no, to my knowledge, nothing to do with them.
Cool.
So
right, cool. Yeah, I think I've covered everything. Is there any last thoughts about the whole crypto space, the community? I don't know, the market that you want to share?
There's that phrase, get out and touch grass, you know, live your life, go outside and ride a bicycle, go fishing, spend time with your family, live your life. You don't need to stay behind a screen 24/7 to be successful in crypto. Yeah. I find the most successful people in crypto and even my own trading is better the less time I spend behind a screen looking at charts. Like anything that you obsess over too much, you tend to make mistakes or you get worn down and tired. So you always have to keep your mind fresh. And that means that you can't live in crypto 24/7. I love where this market is right now. I personally think that we're in the early stages of a bull market. And I was chatting with Matty Greenspan the other day, who's an economist and like a Bitcoin miner and certified trader. And he came out on the record and said, we are in a bull market already. On-chain analysis and like fractal analysis and market structure analysis bears striking similarity where we are now in this accumulation cycle and this like ending the bottoming of this market, bear market process. It bears a lot of similarity to the end of previous bear markets and market cycles. Yeah. So what I like now is most of the bad players are out. Do Kwon's gone and he's in jail. SPF is gone and he's in jail. All of these supposed Bitcoin custody and like Celsius and crypto custody platforms have proven to be like unscrupulous and Ponzi schemes, and they fake. If you don't know where the yield's coming from, you are the yield. So all the bad players, most of them are gone. And people's belief in a messiah, everyone needs a Bitcoin Jesus, like SPF was Bitcoin Jesus. Do Kwon was Bitcoin Jesus. Daniele from Wonderland Money and Abracadabra Money was Bitcoin Jesus. He was a man of the people. They're all populist, right? Yeah. Don't believe in some Bitcoin Jesus. Believe in yourself, right? Like not your coins, not your keys, not your coins, that sort of thing. So I think that most of the bad players are gone. People are into self-custody. All that terrible leverage and rehypothecation is gone out of this market. What we see is accumulation from the smartest money and from the longest holders. And of course, like institutions will come back when these ETFs are approved, if they are. And with that, retail money will come back. So I think time is running out to get positioned in cryptocurrency. That's like, you're still early, as everyone says, but if your plan is to get in early on this bull market and cash out at the top, from my view, the data shows that now is the time. So yeah, we're doing good. I'm really pleased with this market.
Sounds bullish.
Yeah, I'm super bullish.
And we're at the Polkadot Decoded, and there are a lot of people here, so you know it makes us even more.
Yeah, that's true. It gives you euphoria.
It's the vibe, isn't it? That
it's the vibe.
Like people are interested in crypto.
Yeah,
so
that's the last thing I was going to say. I don't want to keep you forever, but if there's a conference near you, most of the time they're free. Go to them. It's the best way to network with people and like share your ideas with people, make friends and be a part of the community. You can't sit behind your computer all day long just looking at charts, not having sex, as they say about crypto traders, and not doing anything constructive with your life. You should get out and connect with the community and live life and drink some beers.
Absolutely. Thank you very much, Ray. I really appreciate you coming on and talking. And if you want to follow Ray, by the way, I'm going to be posting a link to his Twitter profile in the description of this video and also in the pinned comment. Thank you for watching, and I'll see you in the next video. Bye-bye.